Hi, my name is Jim Hilborn,
And I'm Tom Dinas.
and we are the Small Business Doctors. Tonight, we're going to talk about small business bookkeeping and why that's important to the small business person. We all know that we need to keep our checkbook and we need to know how much money we have in the bank. But other than that, why do we need to keep books? I mean, really?
Well, you know, and that is a good question because we sometimes lose sight of what we're trying to accomplish. A lot of us just think it's a study and exercise of futility, but there's lots of good reasons. There's three main ones I always point out to clients. One, first, is management information, and you are the manager of your small business. And management information is divided into two different sections. What you want to know, things that you find that is absolutely critical to your operation, and that you need to isolate and look at. What's your cost of goods sold, you know, the cost of the products that you're selling. And then there's the need to know stuff, you know, things that you don't necessarily want to know, but you kind of need it for different reasons. And so that's kind of like your starting point, you know.
Okay.
And so you say, okay, I have this business. What is important to me to know? What is out there that maybe I don't know? And this is where the professional help that you need when you first start a business. I think one of the times you get real chintzy with your professional fees is in that startup phase because you're always short of cash.
Right.
And so you start doing things from the beginning and you develop bad habits. And even my own personal experiences, you know, once you develop those bad habits, they are very hard to break. So, and then there's another reason you want to keep records is because you need to usually give it to somebody. You need to give it to an accountant to do your income taxes.
Right.
And which is the third reason, which is the IRS has a requirement that you need to give them a representative or accurate accounting of your business so you can pay all the taxes that you're supposed to or not pay the taxes that you don't have to. And it all starts with the record keeping system. I mean, so you have this anyway, you have these three major reasons.
The three-legged stool. Let's go there. All right. Yeah.
Of why we want to keep records.
All right.
And so, and it's to your advantage to keep good records because the better records you have, the more effective you can be and more aggressive you can be in things like tax planning.
And I think that's key. And I would say that from a legal point of view, and by the way, I don't think we started, and if you know who we are, then you already know this, but I'm a practicing attorney and Tom is a practicing financial consultant and tax preparer. So that's why we bring this to you in these different formats. Legally, I'd say that the very main thing is, from a legal point of view of keeping your books is, of course, you want to stay on the right side of the tax laws, but you also want to protect the entity as a business and as a separate entity. In other words, you want to make sure you don't commingle your money with that of the corporation, limited partnership, limited liability company, whatever it is that you are. You want to keep those monies separate because if once you start commingling, then you're maybe not really a corporation anymore, maybe not really an LLC. So, okay. Well, I mean, I think we all, and having been I owned a small retail store before. I owned, building product business, and so we sort of have this vision that, well, I need to be stocking shelves. I need to be helping customers. I need to be on the road selling my products. I don't want to sit behind a desk with a little funny hat on and a little light over my head and you know, keep books and a little quilt. Keeping the, you know, that's terrible. I don't want to do
things that protect the
little,
sleeves.
oh, I like those. No, actually, I kind of like those. Those gambler sleeve things, but yeah.
Well, you know, and that's one of the things you need to decide. To what degree are you going to keep your own books? I mean, are you going to do everything in-house? Traditionally, self-employed people are entrepreneurs. They're not bookkeepers. They're not file clerks. They're
risk takers.
They're
Yes.
risk takers. They want out there. They want the deals. They want to make deals. They want to be in the action. And so, if you're thinking, you know, and it's a good way to save money because everything you do, you know, have somebody else to do is going to cost you. But you also have to look at the cost effectiveness of your time. And the thing I always preach is division of labor to my clients. You look at what you do and how much you can earn. So if you can go out there and cut a deal and make a commission, or you get an override on a product and you make $100 or $200 an hour, then you need to be doing that and hire somebody in at $10 to $15 an hour, whatever it is, to keep the books for you. Or you turn it out to another one to prepare for you, to outsource it completely. You know, the more you do in-house, the less it's going to cost you for the services. Some things are not done efficiently by giving it to an outside source. Right. Things like your billing and your accounts payable are handled much more efficiently in-house than giving it to outside source, because by the time you wrap up all the information, get it to them, they get it back to you, get the invoices out, a certain amount of time is elapsed, which has tightened up your cash flow problems. So, you know, having somebody in-house, you know, and they can be a dual service too, because they're not going to do that. They can answer the phone for you, make appointments, and so you can get a part-time person in, you know, at start, and they can build and go along with you for the ride, and start building, you know, a way to build your business.
Exactly.
So these are, you know, one of the early on decisions, you know, and you don't have to make a commitment and say, this is the way I'm going to do it for the rest of my career, you know, or the rest of the time this business is going to be in business. You know, you can stage into things. You can start doing it yourself, which I always recommend, because then you know what's involved in it. You know what's going into the process, and you know what's supposed to come out, because a lot of clients start losing track as you get bigger of how everything falls together. And this is where things like employee theft comes in, or bad business decisions, or running aground of some credit issues because things aren't getting paid timely or discounts aren't getting made. So starting off and learning the process, and I always like to think, you know, then you understand why I have to charge you to do what I do for you. You know,
That's right. That's right.
Because there is value received for it.
Yeah.
So, yeah, decide, you know, and once again, you start off, get some professional advice, learn where the ins and outs of your profession are, and talk to other people who are in the same profession. You know, what do you do? Because if you go out there and talk, and 80% of the people in your profession or your business are doing things a certain way, there's usually a reason why, and some very good reasons, you know, because it's trial and error, and learn from other people's mistakes.
Absolutely.
So,
yeah. And you know, the other, you know, just back to my retail experience, it's good to know how much money you have in the bank, because in retail you're buying and selling. You're buying at one time, but they'll come that salesman in the door, neatest little line of products you ever saw in your life. Do you have the money to buy them or not? Or do you need to tell him to come back in 30 days? Or, you know, or can he make a deal? And if you don't have the money, then you can't make the deal. So,
right.
And you need to know whether you have the money.
Yes. Everything comes at a cost in business, and all your assets must be working for you constantly.
Right.
And so you must always be able to take the cash or whatever assets you have and utilize them to the best of your ability. You know, you don't want to take all your cash and put it into something that's going to give you a 10% margin when something comes along and you can double your money on.
That's right.
So,
and work those turns. Yeah,
right.
In retail.
And, you know, and one of the advantages Jim and I have had in our profession, both of us have tried other business ventures, and so we have an understanding of things like retail and manufacturing, you know, along with our own professional services. So
Exactly.
give you kind of an insight on all of them.
So, Mr. Bookkeeper, you got a preference as how you keep business? Because I know when I started, and actually when I started my first business, and this is really stupid, but first of all, I did everything wrong. Commingled the money, right? My personal business account. Didn't keep a...
Typical attorney. You guys make like the worst clients ever.
Well, that's because we're stubborn and we're so sure we're right even when we're wrong. But I did that. I commingled, and I did not have a system. I didn't understand basic bookkeeping. I didn't understand what a general daily journal was. I didn't understand allocation of expenses and subcategories to make it easy to handle when we did taxes and that sort of thing. No clue.
Yeah.
No clue.
Well, it starts with the system you choose. The first business I started, one of my partner went to the accounting department at the college. We started a record and leather shop, back in the good old hippie days.
Yeah.
Yeah, it was a great business. But so they asked the guys in the accounting department, and one guy pulls out his checkbook, he says, here's an accounting system. And it's true. If you keep up your check register, it records all the money coming in and all the money going out. Now, one of the things I always insist with my clients is you develop a closed system. And a closed system is one that it's almost fail-safe. If you bring all the money you receive from customers or loans or whatever, and you put it into that account, and all the money that goes out of it has to be documented through either, now debit cards, which I've become a big fan of because of the way of really tracking expenses quite nicely, or checks. But if you have 2 or 3 accounts, or all of a sudden you've got cash on you when you're running around and say, well, I'll deal with that, I'll save the receipt. I get receipts in that got oil stains on them, foot marks, now a lot of the receipts are on these on the pressure or heat sensitive tape.
Oh, yeah.
And by the time they bring them in, they faded out and I can't read them.
Exactly.
So with a closed system, you have it isolated, and your accountant or your tax preparer, whoever it is, has a fighting chance of getting the information put together to do a financial statement or do the income tax. Now the next step is manual systems. They're almost non-existent now because computers have become so cheap. I used to sell a manual system to my clients, and they handwrite everything in and total everything. And totally obsolete, and I don't think I've seen one in the last 10 years. I got one client who still does one I set them up on 25 years ago because she's comfortable with it. From there, you go to computerized system, i.e. QuickBooks, which is 80% of or plus of the small business computerized accounting out there. And people say, why do I recommend QuickBooks? And I said, no matter what program you use, there's good things to it, there's bad. Nothing will meet your needs 100%. But since 80% of small businesses use QuickBooks, you can find lots of people to support it. You have a lot of independent contractors, people who work very reasonably on an hour basis that will come in and help you set it up or help you with your problems and teach you QuickBooks. You're not going to find that with most of the other program. There's a couple others out there, but I tell my clients, well, I want to use this one. I said, well, then I will have to charge you a lot of money to learn that program to be able to help you with it. Or you have to find somebody who knows the program. They all eventually switch over.
And so one of the points here that is if you are going to use an accountant or a tax preparer or whatever, then somebody helping you, then you might delay making that decision until you find out what resources am I. So if my tax preparer, my bookkeeper, uses a particular program, I might want to use that program. It's probably going to be QuickBooks, but
right. And there's advantages. They don't bring any written material. They bring in a thumb drive now. I download it on my computer, and then I can proof the whole system out in a very short period of time.
Yeah.
There's another computerized system that some people are very comfortable with using programs like Excel spreadsheet programs, which is basically the old column or pad electronically. That will do for if you have a small amount of transactions. But if you're doing billing or if you're working with your accounts payable, it breaks down pretty quick. So usually that's one of the big points is if you're going to use your accounting system to do billing for customers, you pretty much need a computerized bookkeeping system. And for very small businesses, and I still have a couple of them, my mother's accounting system, which was the envelope one. Yep. They have 10, 12 envelopes, one for purchases, one for gas and oil receipts, and they just take everything, they stuff it in there, and they bring it in, and I total up for them at the end of the year.
Not bad. I mean, it can be okay.
But I never know whether it's correct or not.
Right.
Because are all the envelopes in there? Are all the receipts picked up? I talked about the closed system before. That's not a closed system. There's just too much room for error. So. And
every expense that you miss means you're going to pay. Not only you paid that money out for some specific product or service, but now you're going to pay tax on it as if you put it in your pocket.
Right.
So that's a bad thing.
That's bad.
Very bad.
I haven't met one client. Everybody says they want to pay their fair share, but it seems as though their definition of fair share is less than what I tell them they have to pay.
It's always true, isn't that? Yeah. So, what about cash? How do you handle cash in a system like this? Well, hey, I'm your attorney. You can trust me, right?
Cash, for one thing, is not a big issue anymore because nobody deals in cash. With debit cards and credit cards, there isn't that much cash floating out in the economy that much. Some people do. But we're on an honor system. It's like the Boy Scouts.
Right.
What's that? I never was in the Boy Scouts, but anyway, they hold up 2 fingers or something. Yeah, whatever.
3.
Oh, see.
Cub Scouts, I think. Too. Yeah.
Anyway, cash you report. You put it into your account, deposit it like any other check, and report that income. You charge it against your accounts receivable if you're doing that. Or if you get the cash and then you use it to buy and pay for a business expense. You take that and take that receipt and put it into your accounting system. But now you've broken the rule of a closed system.
Exactly.
And so is all the cash reported? Do you have all your receipts? And depending on your business type entity, that could be a problem. If you're a corporation and you've taken corporate money and you haven't reported it correctly, you could wind up getting double taxed on some of this money, or you might take the heat of a partner because you don't have an accounting for
That's
it.
right. That's exactly right.
If you're a one-man shop, you can get a little looser than if you have other people involved.
And we're going to talk about one-person shops or even more, or bigger entities than that. We're going to talk about how to watch your cash if you're a cash-heavy system, and how to make sure that your employees are not taking a bonus from you.
I've had 3 clients in the last year with very large thefts that went undetected for a fair amount of time.
Yeah, it can happen. It's a very real problem.
But now, if you haven't, cash is just, there's sometimes people say, well, I'm on a cash basis of accounting. Doesn't mean that you're receiving cash. It means that there's 3 basic types of accounting systems. One is cash, means it's income when you get the money in. So you could bill somebody for $100,000 and have 0 income until that bill is paid to you. And it's an expense when you pay it. Now, it's very flexible, and it's very much to the advantage of a small business because you don't have to pay taxes on your receivables, and you have some flexibility as far as tax planning because some expenses, what month you pay in it, can give you some flexibility. If you're having a really good year, you want to pay that off and maybe pay a couple things a little earlier, not too far out. You can pay some rent in advance and insurance a little ways in advance. So it's a good way to knock down your tax bill. Now, the IRS doesn't like it, and they've tried to stop cash as much as possible, but they've kind of backed off in the last couple of years, and as long as your gross receipts are under, I think it's $1 million for one definition and then $5 million on another. So, for all my clients, it works out just fine, unless inventory is material in the production of income. And then you have to be either accrual, which means you recognize the income when you make the sale, you recognize the account payable when you have the invoice, and you have to adjust for your inventory fluctuations. So
that would be retail stores, grocery stores,
gas stations,
gasoline gas stations, and most retail things. So yeah,
if your service businesses,
my business, your business, now.
Yeah, you don't have to be accrual. And then there's a thing we refer to as hybrid, which is for income you're on the accrual, but for expenses you do it on a cash basis.
That
which just and that's just it actually simplifies things because you're not dealing with having accruals for all the little telephone bills and utility bills, and which can be a little bit of a lot of nitpicking type accounting. So So that pretty much covers your accounting methods. So when they're pretty well dictated, if at all possible, get on cash and stay on cash.
And once again, by cash, we don't mean keeping a lot of cash and paying people in cash. Or it's just a shorthand term for the type of how you're going to treat expenses and payments and accounts receivables.
Right. Now, and I always, the first lecture I give clients to, in that area on bookkeeping is tying your records to your cash transactions. And what I mean like that is you take the closed system, all right? And let's say it's the first year of business. So you have a beginning checkbook balance of zero, right? Right. Okay, so then you put in some money to get started, and so you loan or capital contribution to your business of $10,000, all right? Then you have an income of another 10. 50. So they get, this is slow. We're starting off a little late in the year. So we got 20,000. All right, we got 20,000, then we pay expenses of 5, so it leaves us $15,000. That's how much should be in the bank. So when you do your records, this is basic formula, and it will save you countless hours of problems, and it will give whoever you turn your records over to. I tell clients, if you can tie your cash transactions or your financial transactions to that formula, your beginning, add your income, loans, subtract out loan payments, and expenses and purchases, and if that ties into your ending checkbook balance or in cash on hand, I can do a financial statement tax return, and I know I'm pretty darn close. Yeah. Now, the times that happens with small businesses is not very often. Although it's gotten better with people using QuickBooks and some of these other accounting methods, computerized ones. But if you don't have that accounted for, once again, you might be paying taxes on money you don't have to, or or maybe you would have to, if you got it all in there, because a lot of times it's, you're not recorded the income incorrectly. So, but at least and you have a position that you can defend. Always, if you have better records, you can be more aggressive in your tax planning.
And in simple business, you can be more aggressive in the quantifying the risk taking that you do, because you know where you stand, you know what the bottom line is. And I think one of the things that you and I preach in this program, and we'll say it again, the business of business is business. And you need to know the bottom line. You need to know how much things cost that you sell. You need to know what your profit is, because that gives you the information to know when something is a good business decision or a bad one. If you continue to make bad business decisions, you won't be in business. That's the bottom line, and that's what we're trying to help you with.
Yeah. In other words, Jim and I are trying to get you guys not to make the mistakes we've made in the past.
That's exactly correct. Yes.
Very good at it. Now, another issue on bookkeeping is be consistent. I spend hours trying to solve a problem with a client, and then they'll make the same transaction and make the mistake a different way. But now I have clients that I know they make the same mistake every time. So I can clean it up in 15 minutes.
So what do you mean by that? What do you mean?
Well, a lot of people think that if they make their truck payment, that it's an auto expense. Well, the payment is not an expense. The interest is, but the principal is a reduction of the loan.
Exactly.
So they put it all in, Ford payment, or Cherokee payment or whatever.
I see.
So, but sometimes they'll put it in auto, sometimes they'll put it in interest, sometimes they'll put it under a whole nother, they'll make a separate category for it. And so when you have that, you have to get each one of those accounts, reconcile it out, and make the changes. But if you make it the same way each time, I can make one journal entry and make it all go away very quickly and cheap.
Yeah.
Once again, this is about trying to help you save money and save taxes and ensure your success.
Yeah,
being consistent is very important.
Learning how the tax people talk.
Right.
It's the language. Yeah.
So now we're getting, we're starting to run down a little more on time, but we got to set up a system.
Okay, let's set up the system.
And some of the decisions you're going to have to make, one is you'll hear, well, you need to have a chart of accounts and set up account numbers. And that used to be true because that was the easiest way to do it for us, right? With the use of QuickBooks and these others, when they have this basically a database. You can use named accounts just as easy as you can use numbers, because by the time you've typed in 3 or 4 letters, the account comes up. And so some people are faster on the keyboard part, some are faster on the 10 key, and so whatever works the best for you. I kind of use a combination of the two.
So, and by accounts, you mean rent?
Rent, 630.
Utilities.
You know, yeah, interest, 710. You know,
So, and
I've used these same numbers for like 25 years, and so I just kind of, you know, ingrained into my soul. So.
It's kind of like telling jokes, yeah. 610.
Oh.
Yes, but,
okay. And all right, and so you make that decision. That's pretty simple. And with QuickBooks, especially, they allow you to change. You might start off with one and switch over to the other, and it's not that difficult to do, which is a real plus. So it gives you a lot of flexibility. The programs out there now, their strength is that they're incredibly flexible. And their weakness is they're incredibly flexible, because you start, you know, you can run amok very easily, you know, in doing things. I mean, so, you know, consistency, another thing, you know, the thing you have to look at is controlling your accounts receivable and accounts payable, setting up a system to do that. And that usually always requires a manual check. You know, so that periodically you're going to have to go through and take your AR, accounts receivable list, and accounts payable, and match that against what you know is out there and see where the inconsistencies are.
You need to be doing that anyway as a business management
tool.
Right,
and with your inventory, you know, and trust me, I have clients who said, I'm just going to put it all in the books and it'll be all taken care of. It will never work with inventory. You will always have to do manual adjustments, because for whatever reason, you know, it just never gets tracked right. It's one of the biggest problem areas I have with clients, and so, you know, the annual counting things by number, you know, and you know, you have to do it for several reasons. One is taxes. Another one is insurance. I mean, if you were to have a casualty loss and you have no verification of that inventory, you're going to have a hard fight with the insurance company.
They're not going to pay you. So you can prove it. That's right.
Yeah. And then my big downfall is setting up a filing system to back up your accounting records, which is, you know, gather stuff, set them up in such a way as you can retrieve the hard copies of stuff to match up if there's some sort of question as far as the entries in the QuickBooks. And that happens a lot because it's like, okay, you know, I'm in a hurry, I type this out, send it out, you know, and you know, did I pay that bill? You know, did I pay it twice? You know, stuff going back and forth. You need to be able to have hard copy backup. You know, there's just no way getting around it.
Clear.
Yeah, so that's pretty much the accounting.
Okay.
You know, that's level 1, and we'll be doing another one where we'll get more detail.
We will. A little more advanced there.
So thank you for joining us, and
thank you.
Hope you enjoyed it.